let's focus on the rand right at the top. I mean, pretty stable against the dollar yesterday after we had mixed domestic economic data coming through. I highlighted a little earlier, we've got this local unit trading in a pretty tight range between 865 and 870 to the dollar. What do you make of the rand and where we're headed? What's that outlook looking like on your end?
Yes, Alishia, as you mentioned, we are seeing that the rand trading in a very stable range to the downward trend, and it didn't really react very negatively to data that came out yesterday from the South African point of view. We did see some data which wasn't really favorable for the South African economy, but the rand didn't react very negatively to that data. However, today we are looking at the FOMC meeting later this evening, and that's going to put some pressure on the dollar, and we could see some further strength coming through for the rand later today. We are expected to see some kind of talk about whether the Federal Reserve is going to plug that gap and look at the operation twist as we head into the final few days of this year. But whether there's going to be further quantitative easing, which a number of analysts have been calling QE4, remains to be seen. If we do see that, we could see some significant weakness come through for the dollar.
For the dollar, and as you say, positive implications for the rand. But having said that, we've got to take into account that we're seeing economic data locally filtered through as well. We've got a Reuters poll of 15 economists suggesting that year-on-year CPI numbers are expected to remain unchanged at 5.6%. But if that data comes in higher than consensus, then that could well act as a negative for the local unit, Shireen.
Yes, indeed, Alishia. Standard Bank, however, is also expecting the number to come in at 5.6% in November from the same 5.6% that we saw in October. We do believe that the usual suspects are going to play a role in the CPI number. We are expected to see food prices keep the pressure on CPI as we move, as we get the November and December numbers. But there's going to be some alleviation coming through from the transport component. If you recall that petrol prices did decline slightly at the beginning of November, so that's going to alleviate some of the pressure coming through. But generally, we're still seeing fairly significant pressure on the overall CPI number. We are also expecting the CPI average for this year to come in at 5.7%. But as you did mention, if we do see a significant increase in the number, and if it surprises on the upside, then we could possibly see further pressure coming through for the local unit.
Shireen, what about interest rates? Do they stay where they are? I mean, probably for the meantime, many saying, but if it continues to come through, you know, this kind of negative data that's been spilling over, some saying that we're going to have to see adjustments being made to that outlook on rates?
Yes, Alishia, we have been seeing a number of institutions saying that we could possibly see rate cuts coming sooner rather than later. Standard Bank, however, is of the view that we could possibly see a rate cut only in the first half of next year, but in May as opposed to the beginning of the year. We do believe that the Reserve Bank is going to have to significantly downgrade the GDP forecast before we could potentially see any further rate cuts coming through. Having said that, we're still waiting for the CPI basket to come through, the reweighting of the CPI basket to come through at the beginning of next year. So that's also going to put another spin on whether we do see rates coming through. We do believe, however, that we could potentially see CPI breach the upper limit of the target band in the first half of next year.
Quick look, Shireen, at another currency pair, the euro-dollar. What are your forecasts on that end? I mean, you highlighted that you see pressure being exerted on the dollar, but the euro not sitting in a pretty situation either.
No, Alishia, and we have been seeing that very not pretty situation coming through for the past couple of weeks. There's nothing really drastic coming out of the Eurozone. We have been seeing that there's comments from the Italian Prime Minister and its resignation. We're not seeing any resolution coming through from Greece, and there's still a number of peripheral economies that are still struggling. So we're going to see continued pressure for the euro as long as this year doesn't bring any resolutions.